going to the markets to raise capital remains challenging, particularly for undervalued junior resource companies like Constantine Metal Resources. So the management team looked elsewhere and are pleased to be announcing a very attractive alternative approach to funding their flagship project.
We're announcing a deal, a big deal, with a good partner that's very significant for the future of the company.
A letter agreement is being announced between the Japanese company Dowa Metals and Mining Co. Ltd. and Constantine Metal Resources, which gives Dowa the option to earn 49% of Constantine's Palmer project.
The deal is going to see $22 million spent over 4 years in the project. That includes about $1.25 million in cash payments to Constantine.
Of that $22 million, the first year there's a firm commitment of a minimum $3 million in the first year.
For shareholders, that means we won't need to dilute. We won't need to go to the markets to fund this project.
After the expenditure, Constantine will still be in a position with 51% ownership.
While the final option and joint venture agreement is not expected to be finalized until the end of the year and is subject to approval from the board of directors, the principal terms were established in the letter agreement, making it important to release this information.
The size of this deal is quite material to the company. Both parties are comfortable. It's been signed off by both presidents. And typically the way these things work is you do negotiate the basic terms that you're going to build into a more formal agreement that requires quite a bit of legal work to actually finalize.
Constantine's Palmer project is located within one of the world's most prolific VMS belts. It's a politically stable, safe jurisdiction with a long history of mining.
It's a new discovery made by Constantine in southeast Alaska. It's extremely well located adjacent to a paved highway, about 35 miles from a deep sea port. Current resource is 4.75 million tons. It's a high-grade resource consisting of copper, zinc, gold, and silver. And that resource is composed of multiple separate zones, all of which are wide open to expansion.
Our opinion is it needs annual budgets in the range of $5 million a year for the next 2 to 3 years. With $10 to $15 million, we feel that you could potentially see 10 to 15 million tons, which in our opinion would provide fairly robust economics at the current grade that we see from what we've drilled to date.
We appreciate what Dowa should be able to bring to the table as part of this agreement, this partnership. They have a long history of mining and smelting and refining, particularly with these types of ores, VMS type ores.
The initial roots of the company actually come from processing complex polymetallic ores. They've become quite a diverse processing company that actually now is obviously makes an important contribution to the recycling world.
Dowa operates the largest zinc smelting facility in Japan, and Palmer could potentially provide a secure long-term source of zinc and copper concentrates.
You know, we've struggled. It's been a tough market since we've made that discovery in 2008. We thank people. It's been tough for us to be this patient. I'm sure it's even tougher for shareholders in the high-risk investment part of our business, but we're persistent.
This deal is a watershed moment for Constantine and the project. It's a great deal in a good market. It's a fantastic deal in this market.
We're very satisfied that this is the right deal with the right partner to make Palmer what we think it should be and to really recognize the potential of the project.